Hello, it's Bob Steele. In this lecture, we will go over a problem that will be similar to your assignment and or homework. We'll be looking at it in this format and plugging it into an Excel worksheet. I suggest that you plug it into the Excel worksheet as well and then take those numbers and then put it into the Connect account, which will look like this. So here's computer system installation and custom program development. Ray adopts the calendar year for reporting purposes and expects to prepare the company's first set of financial statements on December 31st, 2015. Using the transactions, record journal entries, we create financial statements and assess the impact of each transaction on the financial statements. Okay, so I'm going to take this, I'm going to grab it up here, I'm going to pull it this way until it snaps like that. And we did the same thing over here. I'm going to take this, I'm going to pull it over here until it snaps like this. I'm going to make this a little bit different size. I could try making it maybe 75 here, and that is small, but I'll read it out loud so we can see those. And this worksheet over here, if I make it large for a second, and we're going to do the same thing. We're going to post the journal entries over here, post it to the general ledger, and see what happens to the trial balance and the accounting equation with each transaction. Got two sets of journal entries, so we don't have to go too far down away from the data. I want to hide some of this first so we can work at one thing at a time and not have excess cells here. So in order to hide columns, I'm going to put my cursor on the J so it looks like this, not like this, but like this. Left click and highlight through to F. Let go. Right click on the selected area and hide. So then we have this information. I'm going to put the information here and then post it out. Then I'm going to take it on the top, left clicking, dragging until it snaps, and then going through the data. So Ray invests 30,000 cash. Now remember, the numbers will be different on the sample problem, but basically the format will be entirely the same. So Ray invests 30,000 cash, 23,000 computer equipment, and 7,002 of office equipment. So this is a little bit more than was invested in the prior problem. We don't just put cash, we put some other stuff in there. First question, is cash affected? Yes, cash is affected. Cash has a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. Cash is going up for the company. So I'm going to right click, going to copy that, going to put my cursor in B6, right click, paste it, 1, 2, 3. Now we're also putting a computer. So computer is another asset. Assets are up here, and we put in computer equipment. So not computers, computer equipment down here. And it's an asset. We're going to increase it by doing the same thing to it, which in this case is another debit. A debit and a debit will make the debits go up. So I'm going to right click, paste it, 1, 2, 3. So, and you could type these in here if you so choose as well. Just make sure to use the trial balance as an area where you can find these accounts. Then we have office equipment. So if I look in here, where's office equipment? It's right there. Once again, it's an asset. We're going to put more into the company. It's going up for the company. So I'm going to right click, going to copy it. Going to put my cursor in B8, right click, paste it, 1, 2, 3. So the amounts that we put in there according to this are, make this a little larger so I can see that, 50 for the cash, 23 for the computer, and 7.2. Alright, and then if we were to take a calculator, of course now we need a credit in order to match those debits. So we got 50,000 plus 23,000 plus 7.2 would be the 8,002. We could use the sum function in order to do that. What I'd like to do is sum this up and make it a negative. So in order to do that, instead of hitting equals, I could hit negative SUM and then double click the sum function and highlight both the debits and the credits in case there's any credits in there, and then enter. So we have a credit or negative number in Excel. Excel sees it as a negative, we see it as a credit, and the debits add up to here. If you highlight them, and you can see it on the formula bar, we'll add it for you, and then we have a credit equal to that. The question now is, what should that credit be? Well, who put the money in there? The owner. The owner put it in, therefore it should be an owner's equity, which is the blue highlighted area, and we can see owner's equity here. We already know we're going to credit it because we debited the assets. What would that do to owner's equity? Well, owner's equity is a credit balance account. If we credit it, we're doing the same thing to it, which would make it go up, which would make sense because we owe the owner the money. So I will copy the capital account, right click, copy it, and I'm going to right click and paste it, 1, 2, 3. Then I'm going to make this large and go ahead and post this. So first we're going to go to cash. I'm in the T account here. I'm going to go to the debit side of the T account and say equals, point to the cash in C6, enter. Then we'll go to the equipment account. So of course we're out of balance. There's the cash going up over here. Going to go to the computer equipment, which is also an asset. It's down here on V34, cells V34. So I'm going to say equals. I'm going to scroll up a little and point to the computer equipment in C7. So this has C7 in it. Then when I hit enter, there we have that, and that goes up in the debit direction. Then we're going to look for office equipment. So office equipment is above computer equipment. It's right there in V28. So V28 equals, so V28 equals this cell. And so then I'm going to say enter. And there's the assets that we have so far. If we highlight them, it adds up to 80,200. We're out of balance by 82. And we need to just post that to the capitals. The capital's in AD9. So I'm going to say equals and point to the 80,002. Once we hit enter, it should go back in balance here and we'll owe it to the owner. So right now we have assets of these green items here, also represented in the accounting equation of 80,002. We don't owe anything to anyone else. Therefore, we owe all of it to the owner, being 80,002 owner's equity. So that's one of the longest journal entries we'll have in the entire process here. So let's take a look at the next one. So we have the company paid $4,005 cash for 4 months rent. All right. So is cash affected? Yes, we paid cash. So cash, we can see over here in the trial balance, which I would always have open whenever you're doing any problem, has a debit balance in it. We need to make it go down. How do we make something go down? We do the opposite thing to it. In this case would be a credit. That's a debit. We need to credit it in order to make it go down. I'm going to put the credit on the bottom, right-clicking, pasting 1, 2, 3 because credits generally go on the bottom. And then we'll put the account -1500. I'm going to hit enter. Now I'm off the cell rather than in the cell. If I credit something, I know I'm also going to have to debit an equal amount for every transaction. The only question is, what do I debit? What did we pay for? We paid for 4 months rent. Now, if I highlight this, I'm going to say, well, where's rent here? And I see a prepaid rent, and you would think there might be a rent expense as well. And in this case, it's going into prepaid rent, which is an asset, indicated by it's up in the assets section. Why are we going to hit an asset and not rent expense? Because even though we're paying the rent now, we have not yet consumed the rent. Therefore, we don't recognize the expense when we pay it. We recognize it when we use it. So we're going to recognize the expense as we consume the use of whatever we are renting. And for now, we have an asset, meaning we're going to get the use in the future. So that's the matching principle. So these are all assets. Assets have debit balance. We need to make it go up. How do we make it go up? We do the same thing to it, which in this case would be another debit, which we already know because we credited cash. So I'm going to right-click on rent, right-click on B11, and paste it. Then I'm going to make it large by going to the maximizing the size and post this. So this is called posting to the general ledger. And we can go over to prepaid rent, which is right here in V22 equals. Then I'm just going to point to the 4.5 and enter. So there's the prepaid rent. We are now out of balance by 4.5. Then I'm going to go to the credit in cash and say equals and point to the credit in cash. That'll make cash go down. That'll put us back in balance here. Notice no effect to net income so far. All right, so let's go to the next one. I'm going to take this, I'm going to pull it, going to snap it. Then we're going to go to 10.3, and we have a company purchase 1,007. I'm going to eliminate 10 there of computer supplies on credit from the office products. Okay, so we purchased computer supplies. Now the first question, is cash affected? In this case, no, it's not, because we purchased it on credit. So therefore, cash isn't affected. What are we going to hit? How did we pay for it instead? We put it on account, kind of like a credit card. The account for on account is generally accounts payable, the bad things going up. But it's kind of difficult for us to think about accounts payable sometimes in terms of should we credit it or debit it. So maybe now, since cash is not affected, we think about what did we get? We got computer supplies. If I look at computer supplies here, we can see that we have computer supplies up here in the assets section. We know that assets, all these assets have debit balances. We know we got more of it, therefore the asset should go up. How do we make something go up? We do the same thing to it as what it is. Therefore, in this case, we're going to debit the computer supplies. And we bought it, and I'm going to eliminate a 0 from 1700 and a credit of 1700. So we know that if we debit something, we're also going to have to credit something. The question is, what do we credit? We're not going to reduce cash in this case. What are we going to do instead? We're going to increase the liability. So we have accounts payable. We already know we're going to credit it. What will that do? Well, liabilities have credit balances. If we credit a credit balance, we're doing the same thing to it, which will make it go up, which makes sense because we owe more money because we purchased something on account. We're going to make this large and then post this out. So we're going to go to the computer equipment over here, computer supplies, I should say, on V9 equals cell C14. Enter. Then we're going to go to accounts payable. So accounts payable is that yellow account down here. Going to go in the credit column. It's in X40. X40 equals, and I'm going to point to the payable. So X40 equals D15. Enter. So we can see our accounts payable went up here, and we have supplies as well here. Going to take this, going to pull it to the left once again, moving down to the date of 10/5, where we have a company paid $929 cash for 1 year's premium on the property and liability insurance policy. Okay, so we're going to look over here. Once again, is cash affected? Yeah, we paid cash. So that's all we need to know that cash is affected. We can not read any other part of the problem and say, well, cash is affected. I can get half of it right. Cash has a debit balance. We know it's going to go down because we paid it. How do we make something go down? We do the opposite thing to it, which in this case would be a credit. Credit's going to be on the bottom, just out of tradition. Right-clicking, pasting it 1, 2, 3. Going to represent the credit with a negative 29. If we credit something, we will also need to debit something for 29. The only question is, what should we debit? And in this case, we bought insurance. If I look at our trial balance, say, well, where is insurance? I see a prepaid insurance. And many times we'll see an insurance expense as well. You might say, well, why is it up here in the assets section and not on the income statement? Isn't insurance an expense? It is, but we expense it when we use it, not when we pay it. So in this case, we buy insurance before we use it, then we expense it throughout the term of insurance. That's called the matching principle of the accrual principles. Therefore, it's an asset. We're making it go up because we bought more of it. How do we make something go up? We do the same thing to it, which in this case happens to be a debit. Okay, so then I'm going to make this large. We're going to post this out. So we're going to go to prepaid insurance. It's in the assets in the green areas up here, and it's right there on V16. So I'm going to say equals, point to cell C16, and enter. So prepaid insurance goes up. We are now out of balance. Then we will go to cash on cell R11 and say that equals, and we're going to go to the credit, which will put us back in balance and reduce the cash amount here, like so.